Hello, and welcome to CMS Forex News. I'm market analyst Nick Nasad. Today is November 17, 2008. The Japanese economy, the second largest in the world, has officially slid into recession, with economic growth contracting for a second straight quarter in the face of weaker international trade and weak business investment. GDP shrank by an inflation-adjusted 0.1% on a quarterly basis and 0.4% in annual terms. Both figures came in below expectations. It's the first time Japan has been in recession since 2001. Expectations are for perhaps 2 more quarters in which growth is negative. Demand for Japanese services fell 0.6% in September, the second straight month of declines in the indicator. Weaker spending by households and businesses on services will depress profits in that sector, forcing companies to cut payrolls, which will hit consumer spending and a cycle of weaker economic activity. In the UK, meanwhile, November's housing prices are down 2.9% on the month and a record 7.1% in annual terms. The government has attempted to try and stimulate lending by supporting the banking system and slashing interest rates, but prices may have to come down further in order for potential buyers to start buying up properties. The Bank of England has cut rates to 3%, which is a 63-year low, and is expected to continue cutting rates in order to head off this period of recession. Initially, to start the session, the currency market saw a period of risk aversion as the GDP data from Japan mixed with lukewarm reaction to the statement by G20 countries, which laid out an agenda for setting up new regulations to manage risks at banks and other financial institutions. The pound-yen pair, for instance, opened Sunday by falling to 140.70, hitting recent support. However, as the session progressed, the pound recovered its earlier losses, rallying 500 pips to test recent resistance near the 146.50 level. The pound also climbed against the dollar, reaching the 1.5080 level in New York trading. The pound was pressured heavily last week until Friday, where it traded sideways. Traders may have taken the recent drop in the pound to mean that the currency had been oversold. It managed to rally against the euro as well today, while the dollar lost ground against its main rivals. In the U.S., industrial production surprised forecasts on the upside for the October period, increasing 1.3% after a downwardly revised 3.7% in September. The increase in October was propelled by a 6.1% increase in mining output as oil production operations and other facilities resumed work after being shut down because of Hurricane Ike. The Empire State Manufacturing Survey indicates that conditions for New York manufacturers continues to deteriorate in November. The General Business Conditions Index slipped 0.8 points to negative 25.4, which is a record low in the survey's 7-year history. The euro-dollar pair plunged initially to open the week, but recovered to trade near 1.2740 by 1 p.m. Eastern Standard Time, which was above the open. Stocks were down in Europe, but risk appetite for euros was evident in the euro's climb against the dollar, the Swiss franc, and the yen today. The US dollar-Canadian dollar pair, which rose to an intraday high of 1.2420 to start today's session, fell back down around 300 pips to the 1.2110 area. The main thrust of the loonies gains came as U.S. stocks recovered from their opening losses, helping to boost risk appetite in the currency markets, which in this pair favors the Canadian dollar. Tonight, Australia releases its meeting minutes from the November 2nd decision to cut rates by 75 basis points on November 3rd. Overnight, Switzerland will reveal data on retail sales, and the UK posts its consumer and retail price indexes. Tomorrow, the U.S. releases data on producer prices, net capital flows, and the NAHB Housing Market Index. And that wraps up today's edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.